Hey, everybody, it's Jimmy and Bill. Today, we're going to do something a little bit different because me and Bill couldn't get together this week to do our walk and our dinner. So, what we decided to do is try something different and do a podcast. And Bill's at his location, I'm at my location. So, hopefully, it goes really good. So, today's video is about mortgages. And a lot of deals are dying because people are making mistakes. And we want to talk about it because it's so important because even today, at the time of this recording, mortgages reached a 22-year high. I think they said it was 7.23. It hasn't been that high since June of 2001.
Right.
Right. So basically, it's so important to pick a really good loan officer or a really good lender because what we're noticing, and I could talk about this stuff a little bit, even though I'm a home inspector, I'm not a loan officer or a mortgage broker. I was a mortgage broker in New York. I was a mortgage broker in New Hampshire, Maine, in Florida, I was a loan officer. My wife was the mortgage broker. So I have some experience, actually years of experience with mortgages. So I feel I'm qualified to talk about this. So when you're picking out a mortgage person, you have to really, really think about what kind of programs they have, right, Bill? Because a lot of deals, like I'll tell you an example. Somebody was moving out of their house recently. Okay, they were selling the house, and the people that were buying their house, the deal died like 5 days before. It died because they were in a flood zone, and the loan officer didn't realize it was in a flood zone until 5 days before closing, and they're
Ooh.
like, "Hey, you know what? We can't do this long. Sorry." And now you have the sellers pretty much already packed up and moved out.
Mhm.
You had the buyers, giving up their lease and just saying, we're moving. And now with the scrambling, what are you supposed to do? Bill, you run into this situation?
Yeah, unfortunately, that's one of the things, not only do you need a good loan officer, but you really have to work with a good quality real estate professional simply because those are those things that, you think that are done easily and should be done, but there's too many times where things like that happen. Things fall through the cracks. I can't tell you how many times, I've seen it, whether it be from, a friend of mine or, somebody I heard in my office, different stories. When you're in the
Right.
industry for a little while, you start to hear different things and, you know, it's different perspectives, but you've absolutely got to stay on top of that stuff. And, that's a super unfortunate situation that happened. But it does happen too much. And to your point, with the interest rates going up, I'm starting to see a lot more, um, back on market simply because, they've gone 20 some odd days. The interest rates hit up, they ticked up again. And then they're, like you said, their debt to income ratio was thrown off by nobody's fault. It was just, that was the way it was
The
because
rates went up.
yeah. And then their monthly payments, which obviously made their monthly payment go up.
So basically, it's not only the fault a lot of times of the loan officer not qualifying the people, but sometimes it's the fault of the actual borrowers. And we're going to go over a bunch of
Mhm.
examples of things that borrowers do. There's like 50 of them. We're not going to go over all 50 of them, but we're going to go over a lot of them to explain don't do this stuff because you might be all ready to move into your new house and then you find out you can't. And at the end of the day, it might be your fault too. So, and Bill, tell me what you think of these also and everything. Like the first thing,
Mhm.
if you're going to tell somebody about your income and saying I make X amount of it's not 2008 again. So if you're going to talk about your income, you better have the ability to document your income, right?
Yeah, you will, especially if you are self-employed. If you're self-employed, you have got to be able to back up what you're saying, and you're going to need to expect a little bit more time for your pre-approval process simply because you are self-employed, and they're going to ask you for a lot more documentation for sure. And if you're remote, same thing. If you're
Right.
working for a corporation and you have the ability to work remote, there's still some policy out there that will require you to get a letter from your employer that you're allowed to work remote in whatever state that you're in, kind of depending on where you come from. But I've seen that with a couple of my clients recently.
All right, let's go over another one, Bill. Debt to income ratio. Basically, you know, banks have this thing saying you can't spend so much money on your
Mhm.
housing, and then they add all your debt, and you can't exceed a certain percentage on all your debt with the housing put together. So if you're in the process of buying a house, and I've seen this happen, and people have done it, they go and they co-sign for their daughters, their sons, or they buy something before the loan closed, because a lot of the banks are going to pull your credit, right before the closing. And if they see inquiries, forget about, okay, the first month is not showing up on that. But
Mhm.
if they see an inquiry just on your credit, they're going to say, hey, what's this? And then you're going to say to them, well, I just co-signed. I'm not responsible for the payment, but I just co-signed for my son.
Right.
It kills the debt to income. What do you think, Bill?
Yeah, I agree. So it kind of goes back to things we've talked about. That's the realtor, when, your agent that's helping you purchase the property, going over those things. Your lender should go over those things too, but really it's going to fall on to, the realtor and helping make sure that you understand, because I get it. People are out there, they see these deals come
Mhm.
up, a holiday's coming, and you're going to start seeing, you know, Labor Day sales, Memorial Day sales, whatever the holiday is, and you're like, "Oh, I'm getting ready to move into a new house. Let's go
Yeah,
grab that
don't do
furniture
it.
and put it on layaway because it's
Yeah,
0 interest for, like, 2 years." It's free money, And you
yeah.
do that not thinking about it and getting kinda wrapped up in the moment, which I totally understand, but at the same time, you just added debt, and then if that pushes you over your debt to income ratio, they may not be able to lend to you.
Yeah, and you have to guys consider all this stuff too. If you're qualified at 7.25 and you're not locked in, so you got to talk to your bank or your loan officer, say, hey, am I locked in? How long am I locked in for? But if you're not locked in and rates rise,
Mhm.
that 1/4% or 0.5% or whatever it changes could knock your DTI
Right.
out, debt to income, and kill the deal right there.
Yeah, yeah, and that's one of those things you can only lock in. I don't remember the days off the top of my head, but, you lock in, that you may hear from your lender too, so I'll back up a little bit, called a lock and shop, where you lock your rate
Yep.
in. Now you do have to pay for that. There's a cost
Yeah.
to that, but if, you're expecting rates to continue to climb, a lock and shop
Right.
product might not be a bad thing. And that's something when you're sitting down and making your plan with your real estate professional that's getting you in contact with your lender, the group of you is going to make that plan and see what works out best for your situation.
Yeah, that's true. And the other thing you have to do too is not only your income, verify your assets. If you tell somebody you have 50,000 in the bank, for down payment, closing costs, and reserves, for after when you close, make sure you can verify it. Don't say, okay, I'm going to put it all in there at one time. I'm going to borrow from my aunt or my uncle or my parents and then put it in the bank. Mortgage companies don't like that. Banks don't like that. Like they're going to say to you, hey, there was a large deposit,
Hmm.
you know, put in here 30 days ago or 3 weeks ago. Where did this come from?
Right. Right, and it's not unheard of that that gets done, and usually just requires a little a letter or some verification of where the funds came from, because what they don't wanna see, it looks to them like you just took out another loan. Where did this lump sum come in? So just be able to prove where that lump sum comes in, and that goes back to staying in constant communication with your loan officer so that when things like that are gonna happen, you get ahead of it and you talk about that beforehand. I'm working with,
Yeah.
a customer now that might be the situation. They're first time buyers. It's a young couple, and um, you know, there might be a gift from their parents to help them kind of get started, to eat up some of those closing costs. So we got to make sure we have a letter and get that ahead so that it goes through the underwriting process.
Yeah. Here's another one. Okay. Make sure you don't mess up your credit. Don't skip any payments. Don't skip any car payments because one missed car payment, just missed bills, especially during the mortgage
Yeah.
process, it's a disclose. It's just forget about it. It destroys loans all the time.
Yep.
You know, don't do that. So like undisclosed, like stuff that's undisclosed too, liabilities, you really have to, disclose that stuff. You know, a lot of people are saying, okay, I'm not disclosing this liability I have, but then the bank or the loan company finds out about it. And then they're like, hey, what's this all about? You know, what do you think though?
Yeah, I've actually had that experience happen with a customer of mine. Um,
Hmm.
this individual was going through a tough time years ago and
Hmm.
then cleaned everything up. And then kinda we got the process going again, and then there was something that this person didn't disclose that we don't really have a way of knowing that on the pre-approval process. You have to go to the underwriting process, and I'm not super familiar with it. I don't wanna give out too many details because I don't want people to put 2 and 2 together, but, um, it was a very unfortunate situation, and I don't think this person even realized it, to be honest with you.
Really?
Yeah, I mean, it was devastating to this individual, and, I really felt for them, but, you know, that goes back to it. Sometimes it's stuff that you don't even know, you don't
Yeah.
even know that it's there. You kinda go
Yeah.
in, you pull your credit, and all of a sudden you're like, "What was that?" Or just there's just different things that pop up, that you don't necessarily know about, so
Yeah. And if you're paying, child support or alimony or something like that, disclose it because they're going to put that into your DTI ratios. At least when I was doing mortgages, they did. So make sure that you don't have any unpaid alimony and child support.
mhm.
You know, that's really important. Another big thing is just be honest with the bank, the loan officer. It's just it.
Simple.
Just be honest with them because you might think you're getting away with something, but at the last minute, right before the closing, you may they might find out about it.
Right,
Is it worth losing sleep over it?
right.
You know? And if you're going to say that you're going to live there,
Live
you have to live there. Okay. Don't say that, oh, yeah, it's owner occupied. I'm going to be living there. But you have a house that's worth a lot more 3 blocks away.
mhm.
It doesn't, they're going to put two and two together because they're going to ask you, what are you doing with this house?
Right, right.
So, so there's a bunch of things, like the house you're buying, you got to make sure that title issues, because if some title issues that haven't been resolved, that could be an issue,
Mhm. Yeah, there was something
you
that
know?
just, happened recently I saw in the news, here in Pasco, and that's why you have title insurance to cover these kind of issues, but there was an easement that wasn't recorded from the '30s, and it just never got recorded even up till now, and then somehow somebody figured it out and found out about some easement that affected a bunch of properties in that specific area. Thankfully, they had, title insurance to help alleviate that stuff, but that's what the title insurance is there for and making sure you have a clean title. That's what the closing or
Yeah.
your closing fees, so that those things don't happen, you know?
You know, tax liens, they're gonna be on your credit. Make sure you don't have any tax liens. Basically, what me and Bill are trying to say is if you're going to try to buy a house, especially with the rates the way they are and how skittish the banks are right now and the lenders, they're kind of skittish.
Mhm.
It's not like it used to be back in the day, when anybody with a heartbeat could get a loan. Just be honest with them. Make sure that, that you could afford it. Don't hide anything, make sure that, the down payment is your down payment. You know, if you're doing VA or FHA loans, make sure the house, meets their criterias and there's not a lot of house defects in it. So the whole point of this whole video is you're not closed till you close. Basically,
Right, right.
you know, just because I've seen loans literally die the day of the closing.
It happens. Thankfully, I haven't had
It
any of that happen to me yet, but, I'm sure that it will at some point because something will happen. Um, so it's not unheard of because I've heard these stories, from other agents,
right.
and, we go to a lot of networking events and things and, trying to learn from each other and, stay on top of this stuff. But these are things that do happen, not by any one specific person's fault or what have you, but it does happen from time to time. And people make mistakes, and just being honest and
Yeah.
upfront and being as clear as you can in the beginning
Yeah.
lets you get those things taken care of towards the backside. So anything that you maybe you don't know, or hey, I got this, and I have like a side hustle, and I've got extra money coming in. You know, can I count that? Can I not count that? You know, just be able to prove it and get ahead of everything. The sooner the better.
Yeah. So my opinion on that is, yeah, I know you're the realtor, Bill, but don't listen to your realtor. Actually speak to the bank. Speak to the loan officer, somebody that's licensed, knows what the current standards are, and knows what's going on. Just because your realtor or somebody, your friend tells you, hey, you could do this, this, and this, don't listen to them.
Yeah,
Go to a licensed current loan officer and do it. And make sure you pick a good loan officer. Look at their reviews. Just like there's good realtors and bad realtors and good home inspectors and bad home inspectors. Trust me, there's bad loan officers too.
yeah,
So really, you know, you want to be able to communicate. Communication is key when you're getting a loan for a house. If you have a hard time reaching that loan officer and communicating, understanding what they're telling you, and they just want to communicate via text message or email,
yeah.
and you can't get on the phone, forget about it.
Mm-mm.
But that's my 2 cents. With today's rates being so high, it's going to make it even more difficult to buy a house. So if you're on the cusp, if you're on the edge of qualifying or not qualifying, it's crucial you do everything correctly. It is crucial. Tell the truth when you're doing a loan and pick a good loan officer. Anyways, that's my 2 cents. Bill, what do you have?
Yeah, no, I agree with you on that. It's not the job of your realtor. The job of your realtor is to understand what the process is and help guide you
Right.
through the process, not give you the answers, because I don't have the answers. I can suggest, hey, I know that there's this program, and this program out there. Let's see if you qualify. Let's set up a three-way phone call with the lender and then have a conversation. And that's where making sure that you can get a hold of your lender is crucial. Sometimes I know, there's a ton of stuff online and those systems work fine. Um, and sometimes they don't. I'm more of a, if you can go and, like, I can go to this person's office, or, after 5 o'clock, because unfortunately, most real estate's done after 5 o'clock and on the weekends, because
Yeah. Yeah, that's true.
people have jobs.
Yeah, it's
And,
true.
it's like, well, oh, well, you can't call me after 5, as the lender. Well, that doesn't really do me any good because I'm at work. So it's, we point you in the right direction and help you navigate the process. I'm not a lender, so I can't give you official advice. I can just say, hey, there are these programs, and working with a professional lender and
Right.
hand in hand is critical. That makes the difference when you can work
Yep.
together.
It makes a really, really big difference. So, anyways, that's today's video. I greatly appreciate it. I hope you guys like this new format. We're still going to do our walks
Yep.
every week, and that's not going away. But if it's storming out, we want to make sure we bring you fresh content of what's going on. So, if you like this kind of videos, do me a favor, consider subscribing and hit the bell notifications. Greatly appreciate it, and we will talk to you on the next one. Thank you, and have a great day.
Talk to you soon. Thanks.